Welcome to Expert Conversations Unpacked, where Chatham's experts break down important trends and themes that we're discussing with our clients in the capital markets. My name's Jackie Bowie, and I'm the managing partner and a board member at Chatham.
And I'm Moritz, Sterzinger, a director at Chatham, helping our clients achieve the best capital markets outcomes. And we're excited to welcome you to another episode of Expert Conversations Unpacked.
So recently, Chatham CEO Matt Henry interviewed Jonathan Goldstein, co-founder and CEO of Cain International. They covered a huge variety of topics, ranging from developing and operating ultra-luxury hospitality experiences to much more personal topics around empathy and humanity and tough business negotiations. So Moritz and I want to unpack that. And for those listeners who haven't had the chance to watch it yet, you can find it linked in the show notes on Chatham's YouTube channel or on Chatham's website, which is chathamfinancial.com. Let's get started, Moritz.
Yeah. I think it was a very wide-ranging conversations with lots of different themes covering, of course, the business side of things, commercial real estate, Jonathan's personal life, his career choices, importance of relationships. Let's maybe start with something that struck me about his career path. The notion that he was rejected a few times when applying for university, being the first one from his family that started an academic career. It led me on to think about, okay, how many people out there are there for whom these are obstacles that they cannot overcome? And even those that then basically get over these hurdles and apply for jobs, how many of them maybe for whatever reason don't get hired because their talent does not get recognized by whoever is interviewing them. So reflecting a little bit on this and what he's accomplished after basically overcoming these hurdles at the beginning of his career, I was wondering what that means, how to think about spotting talent, recruiting talent, retaining talent. So, I mean, you've hired and interviewed plenty of people.
Absolutely.
So,
yes.
Question to you, would you have hired Jonathan Goldstein? Would you have spotted him as a young talent?
Well, I guess having listened to his whole career, I now have the benefit of hindsight and say, of course, I would have hired Jonathan Goldstein. But yeah, I mean, and I felt quite, as he talked through that, I felt some affiliation. I was also the first person in my family to go to university. Didn't face this number of rejections that he had talked about. But I think the point you're making is, would many of people just have given up at that point? You know, would they have made that kind of special call to say, I'm going to give it one more shot to try and get in? Especially because he explained, you know, his family background were, you know, nurturing and supportive, but not in an academic way, but nurtured him to find talent and find something you're good at and go after it. So, yeah, and I think if we take it to how we look at interviewing and hiring people, the academics are almost a given. You know, you expect when people are coming through that first filter, they tend to have a good degree from a good university. But I think, again, when I was listening to it, you're thinking, gosh, are you kind of ignoring a whole section of potential brilliant people because they don't have that kind of academic level? But getting to the point of when we do get people into interviews, you know, we don't test them so much on the technicals of what they learned at university. And I think at Chatham, and certainly for me, what I'm really interested in is, are they interested in capital markets? Do they, you know, read a wide range of, you know, things around politics, things that are moving the capital markets? Because I think it relates to what Jonathan was saying about career advice, which is find something you love and then, you know, get good at it. And if you don't have a natural curiosity for understanding how markets work, etc., then maybe you wouldn't have success in a career here. So certainly that's what I look for. And I sometimes wonder if interviews can go a little bit off piece because I'm asking people very wide range of general questions. But I think that's a good way to spot if someone has a natural affinity to what we do. And he said that himself, didn't he? So I think that kind of relates to that as well.
Yeah, the other thing, and again, it's another theme that I would love to discuss with you, but maybe still relating it to finding the right people for a company was the point around relationships.
Mhm.
For us as a professional services firm, our client relationships are ultimately what define us, and what really makes us successful is that these client relationships are very strong. So one of the things also that you need to look out for in people is not just what you said, are they interested in the world
Mhm.
around them, but can you picture them basically advising clients, building that trust space with clients?
Mhm.
And that is even, I think, an even harder thing to spot
Mhm.
at the time you interview.
Mhm.
And then it goes on to basically nurturing the talent that people have and giving them a career path. And there again, he said quite a few interesting things around, maximizing people's potential, giving them then
Mhm.
runway, giving
Mhm.
them the opportunity to prove themselves. And I think what he also highlighted is that in his view, I believe, and I hope I'm paraphrasing here correctly, is that creating a meritocratic
Mhm.
environment is quite important to that.
Mhm.
Is there anything else that comes to your mind where you say like, okay, this is really important when it comes to
Mhm.
accelerating somebody's personal growth and developing their talent?
Yeah, I think one of the things he said about was, letting people, giving them quite a long piece of rope to
Yeah.
make decisions, feel empowered.
Mhm.
But but I can see businesses, especially very large businesses, especially businesses that operate in regulated environments where that could be deemed quite risky.
Mm.
And Matt made that same comment. Well, giving someone else the power to make a decision could be risky, but that's taking a very short-term view. And what you're trying to do, of course, is take a long-term view. So, and you and I have talked as well about, how do you make sure as a leader, as a manager, in a business like ours, that you give people enough responsibility to know that they're empowered to make the decision, but also know that they're supported,
Right.
that they're not kind of left alone
Yeah.
to go and think, oh, I might get this wrong, or what happens if I do
Right.
get it wrong. And he said himself, he's not made every decision correctly. And I wondered, as you listened to them talking, were you thinking, oh, yeah, I can remember situations where I feel I've not made the right decision. And how do you then deal with that afterwards? And he's obviously been hugely successful.
Yeah.
And maybe it's easier for him to say, well, I've made lots of mistakes, but I don't know how you feel about that.
Nothing ever goes in a straight line,
Yes.
for better or for worse,
Uh-huh.
right? And I would lie if I claimed that there were no instances where
Mm,
you were sort of thinking like, okay, this is maybe not going exactly perfectly. And I think then it's super important that, in particular, when you look at your managers
mhm,
and members of your team,
mhm,
that you feel like, okay, they've got my back, they trust me, I can rely on them.
mhm,
Um, and I can be honest and frank and open about it, and they'll be constructive about it, and they'll be supportive of, you know,
mhm,
overcoming whatever challenges have basically come up.
mhm,
And I think we talked about, of course, spotting talent and then basically nurturing that. So giving them quite a bit of rope. But I think if you're a manager, the main thing that you need to be, I think, cognizant of is basically to giving them that trust
mhm,
that they basically know, like, okay, there's somebody who believes I know what the right thing is and trust me with doing the right thing,
mhm,
and that they step in if they
mhm,
feel like they have to. And I
mhm,
think that creates a work environment that is very conducive to,
mhm.
you know, individuals being successful and ultimately a firm being successful in helping our clients.
Yeah, and I think the trust thing, as you say, it came up a little bit in the conversation too, when he was talking about client relationships. And in our business,
Hmm.
it's us and clients. His business, I mean, he was a lawyer,
Yeah.
so he would have had that same relationship that we have. But as he's gone through his career, be raising money from investors,
Yeah.
those relationships that have to be built too. And one thing that really sprang to mind and he was as he talked about other topics, not so much on his real
Hmm.
personal level, he used the phrase about just getting on a plane, getting round the table,
Hmm.
or getting talking. And it made me think about, as we've come out of our kind of post COVID world, how long it's taken many situations to return to real in person. And I do think there's something so valuable about being in person with even people you already know. The relationship that you build with them and when you see them face to face and not over a screen is totally different
Mm.
to what you have if you don't do that. So that was I had a little smile when I heard him say that, because I think that's one of the things that we certainly pride ourselves on. And personally for me, I would just value an in-person meeting, connection, relationship just so much more highly than anything we do on a screen. But I'm a slightly older generation, so maybe and people say that, oh no, that's just the older people that think like that. But you're much younger, Moritz, so what do you think?
Yeah, but probably not as young as you're insinuating there. I mean, I think that if I look at our firm and at our team, there's definitely still another generation that
Yeah.
that is coming up. So I'm generation Y, I suppose, millennial. So there's still generation Z or I or whatever
Yeah,
they
after
refer
you.
to themselves. So and I sense that there might be a little bit of a cultural difference. I mean, look, one of the things that Jonathan said that struck me is that, again, I hope I'm getting this quote more or less correctly, is that every business is a people's business. And on the one hand, you've got clients, customers, whatever you want to refer to them. But there are also other stakeholders and other people you engage with who are maybe on the other side of the aisle, right? So we, of course, talk and think about our relationships and the trust we build with our clients. But for example, we're negotiating with hedge counterparties, with potential capital providers on behalf of our clients. And of course, interests are not always aligned, right? So they want to make money. We want to get the best deal for our client. But still, it's important that you can negotiate in good faith, and that also with the other parties or the other side that you have a trusting working relationship. And it's a small world out there, right? So it's the people that we deal with, say, on the hedging desk at bank XYZ are the ones that we encounter maybe 2 months down the line for a different client on a different trade. So if you meet again, you don't want to, burn any bridges. And again, I think also there he made some remarks around basically, leaving your egos out and basically, I suppose, negotiate in good faith. So for me, it's been mostly negotiating hedging charges, dealing charges with banks. You've negotiated much higher stakes stuff, right? Including acquisitions, mergers, etc. But have you found that coming at it in good faith,
Yeah,
showing people trust is the way to success there and good outcomes?
I absolutely do. And there was two things that he said, and again, in different parts of the conversation. So one is the mirror test. Like, can you look at yourself in the mirror? And that's that question, have I done the right thing? Did I treat this person well? Did I stay true to my own kind of values about your point about good faith? But I think the other part of it, which when he talked about reputation,
Yeah.
and if you damage your reputation, it's very hard to recover it. And he was, I suppose, quite flippant around, you make money, you lose money, but you have to build your reputation and maintain it. And your example is I hadn't quite thought about it like that, but your example is so good, where we're in a business, we're working with our team, we have a reputation with our colleagues, with our managers. We have a reputation with clients, which we have to uphold, but actually all of those other stakeholders that are in transactions that are not our clients, we have to maintain our reputation with them as well. And I think there's two parts to it. One is the reputation of the firm itself.
Right.
You're an ambassador, a custodian of that firm, and then your own personal reputation. And that goes back, circle back to, does it pass that mirror test of how you've treated people? Now, he was using the example much more around, when you maybe have a team member or employee that's not in the right spot and you have to have a difficult conversation with them. But I think it could definitely be a read across into those other situations that you're using as well. So, yeah, I'm going to say yes. I would say in my broader negotiations and my broader interactions, I try and stick to my core values and that real kind of good faith, honest, candid, even in the most difficult negotiations. And if you stick with that, then I think you'll pass the mirror test, is my conclusion.
Right. And as I said earlier, I mean, it's a small world out there. You always meet twice, and even if you change career paths, like he
Yeah.
did, right?
Yes.
Which you did as well, right? As I
Yes.
know, knowing you fairly well, from asset management to
To
risk management,
to
essentially.
consultancy, yes.
So
I
you can
mean,
empathize.
still within the broader sphere of financial markets, but I think anyone who has listened to
Mhm.
the conversation between Matt and Jonathan, or is going to listen, I'd really kind of hone in on that,
Mm.
because anyone looking at someone who is young has
Mhm.
been. I mean, you cannot, even though he described himself as, was it an underachiever or not quite
Mhm.
doing his best, to reach such a senior level in a law firm at such a young age, and then to make a decision to leave all of that behind, to move to a completely different industry in a completely different role. And he explained that he spoke to a headhunter friend
Mm.
who challenged him, asked him questions, made him kind of think, is this the right decision, or which direction should I go in? And again, to your point, Moritz, I also made that career shift change 10 years. And in asset management, it's all about your track record.
Mm.
So you're leaving that track
Mhm.
record behind, switching to something else. And I did the same thing, where I talked to people who were not in my industry and sector and said, I want to make this switch. I'm trying to decide where I should land. And I don't think I was quite as diligent about it
Mhm.
as Jonathan described. He's, those questions: what do I love to do? What really gets me going? Where do I want to be successful? But I think the point of having someone,
Mm.
whether it be a friend, someone you work with, and it's because people talk about mentoring, but
Mhm.
that sounds very formal and official. I think if you have someone that you trust, but also someone who can, I'm going to say, call you out
Mhm.
and like really probe and challenge you to say, okay, well, why are you making this shift, and what's the right shift for you to do? So, yeah, so I think the whole kind of having someone there to help guide you. I don't know if you have someone like that in your career, if you think back as to how you've maybe transitioned, because you moved from in banking
Yeah.
into consultancy, not such a big shift, but still a shift.
Yeah, that's true. I think there's a lot of truth to this motto, adage, the saying of that you shouldn't choose your job, but rather your manager.
Mm-hmm.
I mean, yeah, you want to do something that you're interested in, that you think like, okay, this is something that might intrinsically motivate me.
Mm-hmm.
But I think it really helps if you have a good manager that is giving you that mentoring, or that you can look up to some degree, and just
Mm-hmm.
basically say like, I can really learn a lot from this person. And my sense is that a lot of people applied for jobs, ended up in places that they not necessarily intended to do
Mm-hmm.
when you ask them before, okay, what is it that
Yeah.
you want to do? I think it's only a small minority that really sets out to do a certain job or profession and then eventually end up there. But I think a lot of people started somewhere, thought that it's interesting and that they're good at it. But this interesting and being good at it doesn't help you if it's not an environment that's conducive to your growth. That's where
Yes.
the manager comes in.
Yeah.
And I think,
Mm-hmm.
reflecting on what you just said, I think that's kind
Yes.
of how I feel about it.
There was one early in the conversation when he was talking more about his real estate and this kind of, the ultra
Mhm.
luxury hotels, and he told a nice story about what his wife thinks
Right.
about when she walks into a hotel, what's important. And he said, well, she'll look and see if there's a doorman, and if he opens the door, and that gives you a nice feeling when you go in. And it made me think again when he got round to the human relationships, where I read in a book recently about a hotel company that was trying to, cut costs. So they say, well, we don't need the doorman because we can get an automatic door. And of course, then they realized that their kind of satisfaction ratings from people coming to the hotel just fell so much, because they realized that the doorman's job actually was not to open the door. The doorman's job was about human interaction and the relationship. So I had a little thought, maybe we won't all be replaced by AI bots after all.
Yeah, I'm relieved to hear that I can still maybe have a career as a doorman if I get replaced by, I don't know, Moritz GPT or whatever it's going to be called. But um if as somebody who's managing partner of Chatham, you had our European and APAC business. When you hear anecdotes like this, does your mind go, okay, so what's the equivalent in our firm? And
Mhm.
do we have somebody who opens the door and greets
Mm,
the client? Do we have that equivalent? Is that where your mind wanders? And
do you know, it does, and, we talk about being world class and everything we do, and Matt, although he was asking the questions obviously in this one, but if I were interviewing him the other way, I know he would say that every single interaction
mm,
that our clients have with
mhm,
Chatham, whether it is the person at the reception desk or the accounts team that answers the phone for
mhm,
an invoice query, that they should get that same level of very high touch, very personable experience. So it did make me
right.
think, how does that translate to our business? Is it the same in a B2B business versus, something that's more consumer? And I think
Mhm,
absolutely it is. So, and it did, I like when you go into nice hotels and there's a nice doorman who opens the door and welcomes you, it gives you that immediate sense
right.
of this is a nice place to be, right? Um, so yeah, I think then kind of when we moved on to thinking a little bit more about his, what he's actually doing at Cain and some of the exciting projects that they have on. One, I'm thinking, I hope I'm fortunate enough one day to actually visit one of the Oman hotels. I've heard so
Right.
many great things about them, but what he describes around the whole real estate sector, it's not this homogenous asset class, and there's a real focus on where do you want to invest to earn good returns. And I was interested that he used those two concepts of it's what people want and desire, that
Mm,
luxury high end, and then it's what we need to live our lives in the modern economy. Is a real kind of almost a barbell at each side. But as a consumer sort of experiencing that, I see it all around the cities that I travel to with Chatham and also with my in my personal life, that there seems to be lots of these kind of high-end luxury hotels, and I wondered what differentiated them from each other. He seemed to capture it very well, but yeah, I don't know if you felt the same when you heard him talk about what they're doing with Oman and some of their hotel assets.
yeah, I think the way he put it is to say, y- you might just be 200 yards or whatever. I mean,
Mhm.
yards, meters.
Yeah.
For somebody
In
from
modern money.
continental Europe, easy to get those mixed up. But yeah, you might just basically be in a different location 200 yards down the road, and it might be
Mhm.
completely different experience and these type of
Mhm.
things. So location, location, location.
Mhm.
I think what you said around the experience and
Mhm.
that being really sort of the defining feature. I mean, one of the things people have been talking about is, say, the death of the shopping mall, right?
Mhm.
And how shopping
Mhm.
malls are really struggling. And it's not like I go to shopping malls too often, but over the past years, I've actually ended up going to a few, which I had not really done that often up until that point.
That's because you're a new father and you have to
Yes,
go and buy all the baby things.
exactly. All cards on the table. It's all driven by basically being sort of a young father, as they say. And I have to say, it really wasn't that bad. Quite the contrary, actually. I must say, I quite
Mhm.
enjoyed it. And
Mhm.
why? Because it felt like an experience. You just walk
Mhm.
around, and there are a lot of different
Mhm.
things, and it's a nice mix, maybe, of interesting foods that you can try,
Mhm.
a good selection of stores in terms of
Mhm.
the brands and what they offer.
Mhm.
And I think for a lot of assets where you can do that in the real
Mhm.
estate space, it
Mhm.
seems to me like, in particular with the tough markets, again, he
Mhm.
talked a little bit about how the last couple of years were
Yeah.
about survival.
Yeah.
But it seems to me that maybe even when some of these assets that have been difficult, challenging, pick your
Mhm.
word, if you can make it more experiential,
Mhm.
there is really something that can completely change the business case.
Yeah.
So keen to hear from you. Is that something that you've been seeing also in our client universe on the real estate side?
Yeah, and I think, I mean, it's interesting on the retail stuff because you've described it as a shopping mall, but then you've described all the other things it offers that are not shopping,
Yeah.
like to your point. So, and I think we've seen certainly in our real estate client base,
Mm,
we've seen some of those retail assets be a big focus
mm,
for, call it capital expenditure upgrades, etc., because people will go to the cinema, go to restaurants, do other things there, and then they just end up shopping anyway.
Yeah.
So, like picking something up as they pass by. So I've had the same experience. I think some of the big malls, certainly the ones near where I live, are good experiences. And there's something quite different to that. I think the hotel side of it, again, just really excited to see what they end up doing at One Beverly. I'm on the website frequently, having a look at progress, etc. But I mean, the scale of that project is huge. But it seems that it's all honing in on that experience point that you're highlighting. So that this is going to be a good one for us to watch as it develops and gets financed, which obviously we'll be very close to, and then once it actually opens, whether it meets that experience grade that he's targeting, and especially having that brand of Oman in there, I think will certainly help it along the way.
Right. And just for the record, I mean, as somebody who's been living in the UK now for 11 years, if I say something is really not that bad, it means I'm absolutely enthusiastic about it. So at some point, Britishness kind of like wears off a little bit. So obviously, I mean, it always helps if you have a differentiator, if you do something that you say like, we're really good at this and this is really what sets us apart. So if you're really good at luxury and you do that, it can help you navigate a very tough market environment.
Yeah.
Of course, hotels, resorts in combination with a pandemic, that obviously is very, very challenging. But then there are, of course, those things that are outside anyone's control, as for example, the broader economic backdrop, interest rates, etc. How do you feel about going into 2025 about these, let's call it factors that are beyond anyone's control, beyond, say, our clients' control who invest in real estate, companies,
Yeah.
project finance?
Yeah, and I think what I pick up from that is it's like the known unknowns where you can do so much planning when you run a business, but you know that things will happen that could potentially move you off course. You just don't know what they are at the beginning of the year. But I think what he tried to capture really was there's been so many things for real estate, and not just real estate, that have kind of thrown them even all the way back to, Brexit, pandemic, Ukraine war, and then obviously the interest rate environment for the last, couple of years when rates have gone up so much. And I think when he's looking forward to 2025 with slightly more optimism, it's relative, right, compared to what they've been through. But I think that what he's pointing towards is interest rates have come down. They are forecast to come down more. This big question of, is the market right or have they priced in too much? I think that's still there. But going back to his major development project, with that financing well underway, I think that would be a real positive indicator that something like that can be financed in the markets at rates of interest where we are at the moment, and the economics still work, right? Because as we think about in real estate, construction in general has been the inflation impact on construction inputs, labor and materials, then you have the interest rate costs on top of that. So I think that would be a real kind of sign of optimism for a project of that scale. As he says, it's pretty phenomenal. And if we can lock the interest rates in at the business plan assumptions that they have, then we're kind of good to go for a couple of years, and hope there's no other curveballs coming in to throw that off course.
Yeah, you say locking an interest rate assumption in your business plan. I mean, it depends a little bit on what these are, right? I mean, again, if you take US dollar interest rates over the course of 2024, and you take, say, the 5-year swap rate as a proxy for what's the interest
Yeah, the
rate on average
fundamentals.
over a 5-year time horizon at a given point in time. I mean, you look at 2024, at one point it was, let's call it roughly 4.5%, I think in April, May 2024. And then you fast forward to September, you get to lows of just a little bit above 3%.
Yeah.
And then before you know it, you've got another jobs report that surprises to the upside, the US election, and your 5-year interest is back to 4 point something percent again.
Mm-hmm.
One of the things, and though to bear in mind, is that interest rate volatility is probably going to persist,
Mm-hmm.
would be my bet.
Yeah.
If you can lock in a rate that is in line with your business plan, you should probably take the risk off
Yes.
and be nimble and fast about it.
Mm-hmm.
Because as we've seen, it can really change quite dramatically. And again, not talking about a slow burn over the course of a year,
Yeah.
but really 1 or 2 or 3 months, which again, depending how fast you're moving with the financing and so on and so forth,
Mm-hmm.
can be the amount of time it takes before you can actually really start actioning on these things. So probably volatility here is to stay, it pays to be nimble.
Yes.
Just shameless plug. I mean, we're of course here to help with all of these things, our clients, and navigating
You've convinced me.
these challenges. Fair enough, at least one person. So, okay, pitch successful, I would say on that front. But one of the things that have struck me in recent years is the salience of politics when it comes to discussing markets
Mm-hmm.
in general.
Yeah.
I think there are a lot of people who basically say, if you look at the stock market, whether person 1 or person 2 is the president, doesn't really make much of a difference.
Mm-hmm.
But it seems to me like we're getting to a point where I think you can make a case that political decisions either way have to happen,
Mm-hmm.
and that they might really impact both inflation and interest rates
Mm-hmm.
in terms of government spending decisions
That's what I was
and
going to
deficits.
say.
I think that's really the major one.
Mm-hmm.
If you look at the deficit in the United States, whether that's going to be reined in or not might change a lot in terms of how interest rates and inflation evolves.
Mm-hmm.
I mean, the Eurozone is, again, probably where disinflation, as it were,
Mm-hmm.
is the most advanced, but still core inflation well above 2%.
Mm-hmm.
And there are talks about NATO setting a spending target for defense spending of 3% of GDP,
Mm-hmm.
and how you want to square that with green transition and all the other demands that are being made to governments
Yeah.
without a lot of debt issuance.
Yeah,
Uh,
I think you're right, and I think there's maybe been maybe before a little bit more kind of dismissive of politics, that they create some noise, but actually directionally for the markets, it's not quite so important. But given the whole fiscal deficit issue across so many countries, and Chatham have talked about this in our webinars, we talk about it with clients all the time. So I think given that is a government decision, and person A versus person B
Right.
may think about deficits very differently, then I agree with you that I think that does have more impact on markets than it might have done in the past. But just to wrap it back to Jonathan's comment, when he talked about career change and things he's doing, he said that he was a risk taker. And I think you couldn't be a successful businessman, entrepreneur like him without taking some risks. But I would be 100% confident that he would hedge his interest rate risk.
Right. Right.
So he's a risk taker in his asset class and where he's investing, and that's what he's paid to do. But to your point, as we talk about those known unknowns, taking the obvious risk off the table when you can do that seems kind of nice, kind of rounded decision. So that officially concludes this episode of Expert Conversations Unpacked. We really appreciate you taking the time to watch and listen, and we'd love it if you would subscribe on Apple, Spotify, or YouTube to catch up on past Expert Conversations and to stay up to date on any future episodes.
We'd love to hear your feedback on topics we've covered, other people and perspectives you'd like us to include, or anything else that we can do to make your listening experience more enjoyable. Use the provide feedback link in the show notes to send us a message.
Thanks again for tuning in.